Okay, hi guys, let's resume with accounts. This will be our last session in consolidation of subsidiary. Previous classes we finished all the sums. We just have illustration 5, practical question number 5, last question in ICA study mat. This is question number, basically last question in the book guys. For you guys it's question number 20 is the question. ICA whatever number, it's the last question in the ICA study mat. Practical problems, last question. Proper question for 20 marks. Fine. Founded in ICA, which question? Founded guys. Who's using ICA study mat? Okay, fine. Let's start. On 31st March, balance sheet of HNS stood as follows. They are given the balance sheet of HNS, share capital, reserves and surplus, current liabilities looks familiar. Anything new? Here I can see other current liabilities has dividend payable, but this is dividend payable for holding company, so nothing much impact for me. Assets, we have non-current investments 3000, shares in S Limited, all of that. Come down, current assets, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, all values are there here. Then you come to your notes, they are given the breakup of items, fairly familiar items. We will come back to it based on adjustments. Come down, we have 5 adjustments. So basically consolidation is nothing but line by line addition. You have step 1, find date of acquisition, date of consolidation. Step 2, find the percentage. Step 3, analysis of reserves. Step 4, you prepare that summary table. Step 4, minority interest. Step 5, cost of control. Step 6, reserves for the purpose of holding company. Step 7, intercompany, if it's there. Then last step is the balance sheet. Wherever these adjustments comes, we have to see which all step it goes to. First, H Limited purchased 180 lakh shares in S Limited on 31st of March, when the balance of general reserve and profit and loss account of S Limited stood at 3000 lakhs and 1200 lakhs. So this is the details of date of acquisition. I acquired 180 lakhs on 31st March 2020. That day my pre-acquisition reserves on the date of acquisition is 3000 and 1200. Clear guys, similar adjustment, nothing new. Next, 1st April 2020, immediately after acquisition, look at this, acquisition is on 31st of March, 1st April, immediately after acquisition, S Limited declared a dividend of 20%. This is subsidiary dividend. For the year ended 31st March, H Limited credited the dividend received to its profit and loss account. This is pre-acquisition dividend or post-acquisition? Pre-acquisition. Why pre-acquisition? It's basically declared immediately next day after acquisition. That means it's declared from pre-acquisition, previous year profits, and they credited the profit and loss account, which is wrong. So you have to reverse it, rectification. You have to reduce from cost of investment and add back in the reserves of, no, it's already added. I will reduce from reserves of holding company, because subsidiary declared holding company reserves, I will reduce it because they credited. Fine. Then on 1st Jan 2021, almost after 9 months, correct, of 1st April year started till December, 9 months, middle of the year, after 9 months, they issued 3 fully paid up bonus shares for every 5 shares. We did one sum with bonus, before bonus, after bonus. This is after bonus. 3 for 5, in the ratio 3:5. Out of the balance of general reserve on 31st March. That means bonus is given using pre-acquisition profit, using this general reserve of 3000, it was given. On 31st March 2021, all the bills payable in S Limited's balance sheet were acceptances in favor of H Limited. Intercompany, here bills payable, there bills receivable. But on that day, H Limited held only 45 lakhs of these acceptances in hand The rest have been endorsed in favor of trade payables. I'll explain that when we get to that point, last step, but for the time being, this is something to do with intercompany. Step number 7, correct, after the reserves. That time we'll deal with it, what it is. On 31st March, S Limited inventory included goods which it has purchased for 100 lakhs from H Limited, on which it made a profit of 25% on cost. What is this? Downstream or upstream? Downstream transaction. So this also will come where, guys? Step number 7, intercompany inventory plus profit reserves, because who earned the profit? H sold to S. So profit is how much, guys? 100 into it is purchased. It's purchased for 100% on 25% on cost. So it will be 25 by 125. We will discuss that. So profit is earned by holding. So no problem. I will adjust only in reserves of holding. When I get there, I will again explain that. This also will come only in step number 6 and 7. Are you following, guys? So I have just run through the adjustments. Some you are understanding, some you are not understanding. No problem. Let's go step by step. Each step we will deal with it. Relevant adjustments I will explain. At least you know where each adjustment will affect. This will affect only in step number 1, 2, 3, 3a, point 1, correct? Point 2, dividend will come in multiples. It will come mainly in cost of control working note, and in step number 6 we will deal with it when it gets there. Similarly, you will go through the entire sum. I am just erasing, so again we can write later. Let's go in step by step, guys. First step doesn't matter. What is first step? Date of acquisition and date of consolidation. What is the date of acquisition? 31st March 2020. So let me write, date of acquisition is 31st March 2020. Date of consolidation 31st March 2021. 1 year happened. That is step number 1. Step 2, can you find out holding and minority interest share, guys? Can you try and find out? I'll give you a minute's time. Question everybody has. Please try and find that out. We will go step by step. Wherever I have to support, I will support you. Radharam says holding is 60, minority is 40%. 60-40. Everybody are saying 60-40. Let's look at this. Adjustment 1 says I purchased 180 lakh shares. So if you see, H purchased 180 lakh shares. Out of how much, guys? Subsidiary. Subsidiary has 6,000 divided by 10. So how much, guys? That is authorized, sorry, issued is 4,800 divided by 10, not paid up capital. So 4,800 divided by 10, you get 480. So 180 divided by 480, percentage how much, guys? 37.5. How many of you got this? 37.5. That means consolidation itself will not come, no. It's not even consolidation. Now, follow, guys. Common mistake again. You cannot take 37.5. Luckily, this sum, it will strike you. Okay, not consolidation. What if it came 60% or 65? Then you would have proceeded. Look at this. This is on the date of purchase. But on 1st Jan, they gave bonus issue. Who gave bonus? Subsidiary gave the bonus. That means this 4,800 is after bonus issue. That means I am comparing the 180 which is before bonus, 480 which is after bonus, and you got a wrong percentage. Step 2 itself sum gone, no need to do step 3. Are you following, guys? For everybody who lost it here, 20 marks consolidation sum, don't expect even half mark. Percentage only, you split pre and post, whole sum revolves on this, nothing will be correct. Sir, line by line addition correct, sir, that also this sum there say adjustment. Following, guys, maybe if examiner is grateful, he will give you 1 mark. Now what should I do? I have to make both before bonus or both after bonus. What is the right way? Make it after bonus. What was the ratio of bonus? 3:5. Idea is not for me to put you guys down. Learn where you can make mistakes so that you don't make the mistake in exam. So 180 lakhs into 3:5. This was before bonus. So after bonus will become, number of bonuses 108. So 180 plus 288. Is it correct, guys? Hello? Is this the correct number? So 288 is after bonus. 480 also is after bonus. Percentage. Correctly 60 is coming up. That's it. Are you following, guys? See, before bonus 108 is bonus shares. So after bonus is 180, before bonus plus 108. After bonus 288 divided by 480, 60% is the correct. How many of you got 60%? Good job. Others, you would have missed out on the bonus, so would have been struggling. Following, guys, step number 2, the only sum where step number 2 had some working that you had to do. Which reason? Why 180 into 3 by 5? ST Limited issued 3 fully paid up shares for every 5 shares held out of the balance on general reserve. So bonus ratio is 3 shares for every 5 shares. I have 180 lakhs. So into 3 by 5, 108 is the bonus shares. Got it? Is that your doubt? Clear? Okay, fine. Proceeding, guys. So now step number 3. So 60% is my holding, 40% is minority. Everybody clear, guys? Step number 3, analysis of reserves. Fortunately, we don't have anything to do with revaluation here. Revaluation comes means depreciation, all of that will come. Here we have only 2 reserves. What are the 2 reserves, guys? General reserve and profit and loss account. Okay. Hold on. Online students are saying I'm not audible. Let me continue. I think it's just 1 second. Online students recording. Hold on. I'll just rejoin and see. What about now, guys? Google Meet audible? Okay, okay, fine. Okay, I don't know what you missed. You can see the recording, but I will just quickly summarize. Step 1, we found date of acquisition and date of consolidation. Step 2, we computed percentage. 180 was number of shares before acquisition. Into 3 by 5, 108 is the bonus shares. Add bonus shares. 180 plus 108, 288 is the number of shares after bonus issue. Percentage is 60%. I hope it's clear. Till here, online Google Meet, if I am not audible, you can unmute and talk. You have an option to unmute and talk. I can hear you. If you just wait, sir, if you put in chat, I can't see it. Unmute. For doubt, you're asking. Vignesh, where are you? Now you should unmute and tell me, sir, not audible. Where? We didn't hear. Anybody heard? No. Okay, you are not able to hear. Okay, fine. Then problem is on something at Google Meet. Oh, not audible. Then my fault. Sorry about it, guys. We will continue to step 3. Step 1, step 2, we have found percentage. Those who are watching recording, ignore the last 2 minutes. I am not going to edit this. Okay, fine. Let's proceed. Both the Vignesh's teamed up this today. Okay, fine. Now let's go to profit, guys. Look at the profit. Which one we took? We took We need to take profit of subsidiary 1380. Let me do both in parallel. Okay. General reserve and P&L account. Let me do this sum in ledger style instead of doing chart. Both are the same. What is the closing balance given in the balance sheet? 1380, 1620. Correct? Or I'll do it in both ways, guys. General reserve 1380. P&L is how much? P&L 1620. Let me write the opening balance also, which is given. They gave opening balance below, guys. General reserve is 3000, P&L is, so 3000 is the opening balance, P&L is 1200. One adjustment which is on the top of my mind, because just now in step 2 I did bonus shares. Bonus is given from general reserve, so I have to reduce bonus. How much is that? Sir, how do I find that? Look at this. 4800 is after bonus. So what is before bonus? Sir, I am not understanding. Very simple. X plus X into 3 by 5 is equal to 480. Or in other words, 4800. Share capital after bonus. Correct? So, share capital before bonus is X plus bonus, which is X into 3 by 5. Adding both, you will get 4800. Solve for X ratio. Everybody is aware, guys. Hello. Cross multiply, left hand side, right hand side. You play around with it. You will find X as 3000. Therefore, before bonus, the share capital of subsidiary was 3000. Bonus is 1800. Are you following, guys? Everybody got this? Hello? Clear, Rahul? Sure. If you want me to solve this, I will just solve for everybody's comfort. LCM, guys. X plus. 1 second. 3x by 5 by 1 is equal to 4800. 5x plus 3x by 5 is equal to 4800. Then somebody will tell 8x is equal to 24,000. Therefore, x is equal to 3,000. Clear? Some of you, if you have doubt, guys, just for your comfort, again you will tell sir didn't solve, means I can't record the video again. Okay, fine. So less how much, guys? 3,000. What is it? Bonus issue. Just checking if you are all attentive. Bonus 1800. You will get balance as 1200. Are you following till here, guys? So the closing, if I have to prepare this in ledger, let me do in ledger also. Closing balance is 1380. Opening was 3000. In that I gave bonus issue 1800. P&L also closing balance is 1620. Are you following till here, guys? Sir, now what will come next? Can I write the balance as post? No. I need to go and check the adjustments if anything will impact my reserves. So let me reread my adjustments again. Of course, in exam you have to do it again. Adjustment 1 already dealt with. I won't do it again. Adjustment 2, on 1st April, S Limited declared a dividend of 20% for the year ended 31st March and holding credited this to its P&L. Regarding holding, we will do later. We are analyzing whose reserves? Subsidiary. On 1st April 2020, that means they already declared dividend, and the balance that you can see here, which is on 31st of March, is after declaring dividend. Correct? These reserves is after declaring dividend. That means during the year I declared dividend. How much is that? 20%. Correct? 20% of share capital. How much, guys? How much? What is my share capital, guys? 3,000 or 4,800. Dividend is declared on 1st April 2020. Correct? Look at this. 1st April 2020. On that day, bonus was not yet made. That means you will not take 4,800. I will take into 20%. Opening, how much? 600 is my dividend. Now 600 I will reduce from P&L or general reserve. Question is not giving adequate information. So I will take it from whichever I want. Correct? I can take it from P&L or general reserve. When you look at the study mat also, they give alternate assumptions you can take. So let's say from opening balance, I declared a dividend of how much? Where do you want to take? P&L or general reserve? P&L, anything is fine. Honestly, anything is fine, guys. Answer will be the same. So let's say dividend declared how much? 600 reduced in P&L. Here also if I say from opening balance in current year, from current year profit. Okay, are you understanding ledger? We'll come to that later. Okay, ledger, are you following, guys? Next adjustment. Bonus issue we already accounted for it. Dividend also I already accounted. Next, on 31st March, bills payable. This is something to do with intercompany. Nothing relevant now in analysis of reserves of subsidiary. Last adjustment. On 31st March, S Limited's inventory included goods which it purchased for 100 from H. So who made the profit? H made the profit. That means I have to deal with this in reserves of H, not in reserves of S. Thankfully, it is downstream. If it was upstream, then you have to deal in reserves of S. Are you following, guys? Now you are understanding. So again, it will not come over here. It's not going to come here because this is a downstream transaction. I am analyzing reserves of subsidiary. It will not impact. Are you understanding, guys? I am seeing which adjustment will impact here. That's it. So now I have to close these ledgers, guys. Let me close P&L. P&L closing balance is 1620. That means what would have been current year profit? What should have been the current year profit? 1020. Are you following, guys? See, I prepared ledger. Opening is given, closing is given. During the year, dividend is declared 600. That means current year I would have earned 1020. So 1020 is my post. Current year profit post. That is, I'm coming to that next. General reserve, if you close, how much is that? Where 180. We are not yet done. So 180 is coming over here. Correct. So what is the meaning of this? That means general reserve had an opening balance of 3000. I used 1800 for bonus. So my closing is 1380. There is a positive 180 in general reserve. That means what? That means money came to general reserve. That means the entry would have been P&L to general reserve. That means what? I should write here 2 P&L 180. That's why I am doing both in parallel. Sorry, 2 general reserve 180. Here I will write by P&L 180. Are you following, guys? Because the only way general reserve can get a credit is when the balance comes from my profit and loss account. This I am understanding. When if you did P&L first, I will close with 1020. Then next when I am doing general reserve only, I understood, oh, I have to go back and make the change. So here it will not be 1020. Instead it will be 1200. Correct? How, sir? If 180 comes here, then my closing balance will become 1200. Are you guys following? Clear? Same thing if I have to represent in the chart. If I have to represent in the chart, look at this. Pre is 1200. Current year in general reserve Yeah, opening is 3000 minus 18, balance 1200. So current year addition is how much? 180. 180 will be post. Are you following, guys? I am doing the sum in both ledger and the diagram that we usually do. I am again repeating. Look at this. General reserve has an opening balance of 3000, closing of 1380. Bonus declared. So the missing figure is 180, which came from P&L. Same thing if I prepare in that usual chart which I do. Opening is 3000. Out of that, bonus declared is 1800. So balance opening is 1200, but closing is 1380. So 180 came this year from my P&L. So it is post. Are you following up? Go to P&L. If I go to P&L, opening balance will remain as it is. There is no adjustment in opening balance, correct? Dividend is post or pre-acquisition now? Dividend declared. Which one? This 600 is pre-acquisition. So since it's pre, I have to reduce over here, correct? I will reduce here. Minus dividend, how much? 600. So my balance pre is 600. Then the balance of the current year is 1000. No, 1620 minus 600. 1020. However, after dividend, yeah. So 1020 is what I get. But there is a transfer which came from P&L. From P&L it went to general reserve. So that transfer I have to account of. So plus 180, because that 180 will not be here. So now you will get 1200, which is my post. Are you following, is correct? Let me just check this. P&L opening is 1200, closing is this, transfer so much, dividend so much. So current year I earned how much? 1200. Will I take post as 1200 or 1020? Are you following what is happening, guys? See, current year I earned 1200, but out of that I transferred 180 to general reserve. So will I take 1200 or 180? 1020 only will be my post. In other words, if I have to put it in simple for you, I earned 1200 this year, 180 was transferred to my general reserve, so I am left with 1020. Are you following, guys? Let me repeat the whole thing again for everybody's comfort once. Look at this. Which method are you understanding, ledger or chart? You should understand both. Ideally it's same. I am just presenting in a different way. See, in ledger in chart it's very easy because you are used to chart in all sums. Closing is 1380, opening is 3000. Reduced bonus. Balance pre available is 1200. Anyway, bonus is taken part of pre, it's added to my share capital. So remaining 180 is post, which came this year. Similarly, P&L 1620 is opening from 1620. So closing is 1620, opening is 1200. In that I reduce the dividend of 600. Balance 600 is pre. So then the difference 600 to 1620, 1020 is post. Are you following, guys? Let's go check the answer if it's correct, because later if it's wrong, we have to do the whole thing again. 60, 40, 40, 60 is correct. Come down, general reserve 180, P&L 1200. Look at this, out of 1200, 180 has been transferred to reserves. So I am left with only 1020. Look at this, we are taking 1020 as post acquisition and 180 as post general reserve. They did not solve like this. What they did, they solved full 1200 as post. The question can also be solved by taking 1020 as post acquisition P&L and 180 as post acquisition general reserve. If you don't understand the note, leave it. You will understand later. What he did, he didn't take 180. He would have taken full 1200 in P&L, because We followed chart method, we got this. That fellow followed ledger method and he took 1200 in revenue profits. In general reserve, he did not take this as post. Instead, he took full 1200. Are you following, guys? It's the same. It's basically the same, guys. We are doing the right way by doing 1020 and 180. They added both and they're taking 1200. It's the same. Are you following, guys? Honestly, how many of you understood this pre and post? After this, sum is nothing. Now we have to go to step number 3A. Particulars, total, holding, minority interest, share capital. Yes, I'll explain that again. Total, post. Let me explain that part again. I'll just redo that again for everybody's comfort. What was the closing general reserve given in question? 1380. Out of this, how much was opening? 3000. Like 3000 was opening given in question. In this, bonuses 1800. So my remaining pre is 1200. That means current year addition in general reserve is 180. This should have come from my P&L. So if I go to P&L, what is P&L closing? 1620 is closing. Opening they gave us 1200. From opening only I declared dividend of pre-acquisition. So my remaining opening is 600. Then the balance current year earning is 1020. Why I have only 1020? Actually I earned 1200, but I transferred 180 to general reserve. So here pre is 1200, post is 180. Here pre is 600, post is 1020. Following? Got it? Sure, 100%. This 180, how can 180 come here? It can come only from P&L. Following? Sure. Now come right total. What is the total share capital, guys? 4000. Use the same values what's there in question in lakhs. Holding is 60%, minority is 2880, minority is 1920. You might wonder, sir, what about the bonus? It's already included in this and it's taken as part of pre. Next, total pre, come down. Our total pre is 1200 plus 600, correct? Of how much you are getting? 1800. Similarly, total post is 180 plus 1020, 1200. Here only they have done little different, but you understood this. Proceed. Holding share of pre 1080, minority 720. Similarly, post 720, 480. Understood till here, guys? Hello? If you go by step, are you getting it? What is minority now? Total of this. How much? 3120. Everybody finish step 3A, the magic table. Come down. What is next step? Minority interest. How much? 31. Another way to compute 3120. How to check if my entire magic table is correct? Go to my question. Where is that? This question, you know. Yeah, finally. Question. I will take my subsidiaries. Share capital. I will take my subsidiaries. Reserves. How much? 7000 into 40%. How much? 3120. Are you following, guys? Sir, then why, sir? Unnecessarily, why am I preparing this table here? Because if this tallies for you, then you can confidently tell these values are correct. Are you getting the double checking, guys? Actually, I don't have to do this. But by doing this, I am giving a detailed breakup and telling myself, hey, this table is correct, so my sum is going to be correct. Are you following, guys? Clear? Unless there is any adjustment in the closing reserves, like dividend to be declared, all of that. So come here, minority is 3120. Can we proceed? Are you understanding the reconciliation logic, guys? You don't have to do it in exam, but you will do it for your comfort. So what if you do in exam and it's not tallying? You do like this shortcut in exam out of fear. Here you did not get 3120. That means what? This is not correct. The table is not correct. You did some mistake in analysis, or here some adjustment you forgot, like reducing future dividend if anything was declared. Are you following, guys? Unaccounted bonus, like that. Come down. Next is step 5, computation of cost of control, or what is it? Capital reserve. I'm just seeing you're writing as it is or not. Cost of control or capital reserve. What I paid assess, what I got. Can you quickly compute, guys? What I paid, cost of investment is there in the question itself. Investment is 3000. Investment is how much, guys? 3000. Are you following? Minus net assets. No, let me do it first normally. Minus net assets on the date of acquisition. How to find that? This table. Correct. I will add both of these. Correct. How much? 2880 plus 1080. How much? 3960. Are you following, guys? Is my answer correct? No. What I forgot? Pre-acquisition dividend. Subsidiary, look at this. Adjustment number 2. What mistake they did? The dividend which was declared was taken to the credit of its profit and loss account. So you have to pass a rectification entry. P&L account debit to investment. How much is the dividend? 600. Already P&L we debited, correct? Where? This one, no. We should do in reserves of holding. This is entry in the books of holding. Guys, are you getting confused? Hello? Second row, Pavitra following. Sure. Less dividend. How much? 600. 2400. Compare with 3960. Sorry. Correct. Yes. Online, you have a doubt? Online. Okay. Can I take 600 like this, guys? This is the full dividend. What is my share? Holding share is 600 into 60%, 360. So you get how much, guys? 1000? 640. 2640. Another area where you can make mistake, dividend reducing 600, take only holding share. Those who figured out, very good. 2640 minus 3960. What is my goodwill or capital reserve? Capital reserve. I paid very less. How much? 1320 is my capital reserve. Are you all following, guys? Let me go cross check if the answer is correct. 1320 is the capital reserve in the book also. That's what we got. Yes, Vignesh. Yeah. No, don't confuse with associate consolidation. Here, subsidiary declared dividend of 600. In that, what is my share? What I would have received? 60%. So 600 into 60% reduce 360. Are you guys following? Okay. With some. No. Only if it's pre-acquisition we will reduce. Don't confuse with AS 23, 27, 21, 21. Keep it as it is. That's it. Okay. Done with this, guys. Everybody understanding here, Rahul? Yes. Correct. So good question. What Kalyan asked, sir, when I compute net assets on the date of acquisition, his question is, sir, I should take net assets on the date of acquisition. So on the date of acquisition, my share capital would have been only 3000 and my total pre would have been general reserve, correct? His doubt is, sir, but in this table, what you have done is you have taken 4800, which is post bonus, which is after acquisition, correct? Now, share capital, reserves and surplus, before bonus, after bonus. Now, let's assume share capital before bonus is 300, reserves is 200. This was on the date of acquisition. On the date of consolidation, I gave bonus from pre-acquisition reserves. So let's assume bonus is 100. So reserves will become 100, share capital will become 400. The total remains the same. Are you following, guys? In the table, we ended up taking value on date of consolidation 400 and 100, but it is basically internal movement within reserves and capital. Are you following, guys? Because bonus is given from pre-acquisition dividend. Next, what if it's post-acquisition? That only we did one more sum, before bonus, after bonus. In that case also, I will take the same share capital. In that case, you will get capital reserve. We did one sum, whole sum, before bonus, after bonus. We did the whole sum twice. In that post-acquisition, there I would have told this share capital includes bonus, which is post-acquisition. I told you that time goodwill or capital reserve will change because there is a change in shareholding. Do you remember, guys, that sum? Before bonus we got a goodwill of 480. Afterwards we got capital reserve of some number. That you remember that same thing. So if it's before or after, conceptually it's different, but step 3A will not change. Sir, for exam I want, sir, take on balance sheet date. That's it. Share capital you will take on balance sheet date. If it's bonus with pre, bonus with post, conceptually it's different, but answer will be the same. Are you following, guys? I don't know if you understood his doubt itself. How many of you understood his doubt? If you didn't understand the doubt, leave it. You understood the sum, what we are doing, you proceed with that. Okay. Yes, 1 second. I am just seeing where I am now. We found capital reserve of 1320. This is the last step we did. Yes, Dhyaneshwar, doubt. No, date of acquisition will never change. See, I told you goodwill or capital reserve will change whenever there is a percentage increase or shares increase. Percentage increase we don't have in syllabus. Unlike consolidation of associate with step acquisition, here only share increase. Because number of shares is increasing because of bonus, goodwill capital reserve will change after bonus, before bonus. Further only we have a separate sum. In that sum, if you see, even minority was same. Only that goodwill capital reserve changed. Got it? 31st March they got shares of 180, correct?
They issued, the subsidiary company issued
Bonus from pre-acquisition reserves.
the establishment of holding subsidiary in relationship to establishment of plan.
You went back to step 2. So his question is, see, those who are watching recording, for you we have stopped at 1320. I am answering doubts. His doubt is, sir, 1st April I had 180 shares. Bonus was given only on 1st Jan. That day only they became holding subsidiary. No. Before bonus, we had 180 divided by 300. After bonus, it was 180 plus into 2 by 3, how much? Sorry, 3 by 5. 108, how much? 288 divided by, here percentages 60, here also already holding. I can't become holding after bonus issue. Percentage maths, guys, percentage before bonus, percentage after bonus should be the same, because it's given in the same ratio for everybody. Are you following? His doubt was, he thought 60 came only here and here 60 was not there. Clarification: before bonus, after bonus, percentages 60 only, because bonus is given to everybody including minority. When his point will be valid? Sir, I made a private placement only for select shareholders, then his point is valid. Or rights issue only for a few shareholders, then your point is valid. Do we have sums like that? Yes. CA final. Okay. Okay, now last 10 minutes we discussed doubts, guys. First row, some of them are not able to understand anything. No problem. It is doubts of others. If you didn't get the doubt, it's okay. Did you understand how 1320 came? We will proceed to step number 6. Computation of reserves and surplus. This is a key step, interesting step over here. First you write down reserves and surplus of holding. Go to the question. How much, guys? 2784 or 2715 or 5499? I am finding reserves for the purpose of balance sheet. I will take everything of holding. Why only 2748? Fully I should take 5499. This is reserves of holding. Second, add post acquisition of subsidiary. My share of post acquisition. Where is the answer for this? Table we did 3A. How much? 720. Correct? 1070%. Correct? 60%. 720. Correct? So I will add how much, guys? 720. Are there any more adjustments? Yes. Now follow. I want you to try it, guys. There is 1, 2, 3 adjustments that will come here. 3 adjustments. If I didn't tell, you would have finished the sum over here. 3 adjustments will come. Can you try what those 3 are? Out of the 3, answer for 2 is in the adjustments. 1 you already computed. 1 I will tell you. 1 is capital reserve. We computed how much? 1320. Just now I told you. So I will add let's keep capital reserve separately, guys. I will add in the last 3, 4, 5. Separately I will keep capital reserve. Disclosure. I can't add capital reserve with my general reserves, which is how much? 1320. I am telling you, apart from capital reserve, there are 2 more adjustments. It is going to come over here. One is downstream stock, other one is pre-acquisition dividend. Perfect. I will again explain. Look at this. Dividend received by holding was credited to its P&L. I have to reverse it. What was the rectification entry you passed above? P&L account debit to investment. How much, guys? Not 600, 360. Correct? 360. Here I reduce 360. So rectification. I should reduce here also. Pre-acquisition dividend 360. Are you following, guys? Double effect, guys. It's an adjustment entry I am passing. Next will be downstream stock reserve, which holding earned profit. How much is that? You compute from 5th one. S Limited's inventory included goods which it has purchased for 100. So 100 is the selling price which I purchased, for which H made a profit of 25% on cost. So 100 into 25 by 125. Correct? How much you are getting? 20 minus 20, you will get answer as 5499 plus 720 minus 360 minus 20. 5839. Are you all following, guys? Plus capital reserve, of course, separately. Let me check the answer. I don't know if it's correct. Can you add both of this, guys? Add both capital reserve plus this 7159 now. Check the answer. 7159 is what is there in final reserves. Are you understanding, guys? How many of you understanding this? Clear? Okay. Can we go to balance sheet? Hello. Step 7. What is step 7? Intercompany. Step 7 is intercompany. Nothing great here. Let's look at the adjustment. Adjustment number D. What is D saying? On 31st March, all the bills payable of S Limited, that means that we draw that S Limited's bills payable, whatever amount was there, all the bills payable were acceptance in favor of H. So H Limited's bills receivable, these both are not the same amount. This could be 100, this could be 60, but this 60 is part of this 100, so I'll eliminate this 60 here, I will reduce 60, but they gave some adjustment. They are saying, but on that date, H Limited held only 45 lakhs of these acceptances in hand, and the rest were endorsed in favor of its trade payables. What this H Limited did, it's like, look at this, I'll explain. H Limited, S Limited. Let's say S Limited's bills payable is 300, guys. Here bills receivable, let's assume it is 300. I will knock off. This is normal transaction. But what H did, except for 45, leave 45, remaining reduce how much? 255. In my example, this whole amount was endorsed in favor of its trade payables. So what it did, internally it cancelled this and cancelled this. So 300 is there here, but I have only 45 here. Are you following, guys? So I can't cancel fully. I can cancel only 45. I can cancel only what is there in both the books. Because this guy endorsed to somebody else, I will cancel only 45. Sir, now what about? Now that means what will happen? I endorse to third party. Who is the third party? My bills payable. So directly S Limited now should not pay H Limited. S Limited should pay the third party. So it's no more intercompany. Are you following up? Are you understanding? See, S Limited should have paid H, but because H Limited endorsed it, S now has to pay to the third party. Are you following this, guys? Everybody clear? Hello? So I will adjust only 45. So in step number 7, I will just write down like a note. Bills receivable and bills payable of holding and subsidiary will be adjusted to the extent of 45, full stop. That's it. Are you following, guys? You will write a note for your own reference, like a working note, why you are doing the adjustment. Bills receivable and bills payable will be set off to the extent of 45. That's it. Done, guys? Done? Now I have to prepare what? Consolidated balance sheet. Of course you will do it, but I want to show you, we will do it together. You should not struggle in consolidated balance sheet. It should take you less than 30 seconds, even though the sum is complicated. Let me show you the art of preparing balance sheet again, guys. I am doing it here itself, CFS. All the values are already done. So you have to be very careful here. Share capital, let's do it together. You write the format later, at least you fill the amount. Share capital how much? 12,000 or 16,800 or 4,800 or? Last sum, guys, take only holding 12,000. Are you following? Clear of strike off. Next, reserves and surplus. How much? You don't have to search anywhere. Step number 6 is beautifully giving you the answer. 7159. Happily come here and write 7159. Look at the speed. 1 minute is a lot of time. Next, can I go to current liabilities? No. If you go to current liabilities, you're going to lose step marks. What should come before current liabilities? Minority interest. So I will write down here minority interest. Go to your steps. 3120. I am writing here 3120. Are you following, guys? Easy, huh? See, shareholders funds like this I finished. Reserves, that means you already did all the workings, guys. It's just pasting the values correctly. Are you following, guys? Common mistake, 2 common mistakes. People forget to include capital reserve in reserves. People forget minority interest. Next is trade payables. Now it's line by line addition. 1833 plus 1014. Anything else? Minus 45. Remember the template I gave you, H plus S minus step 7. Step 7 is what? 45. So 1833 plus 1014 minus 45, how much? 2802. Short term provisions, 855 plus 394, how much? 1249. Super. Other current liability, dividend payable, add asset is nothing, they have not given any adjustment. It's a liability, that's it. 1200 plus 0, that's it. Your liability side will tally. I can confidently write, yes, this is the total. How much? 27,530. Don't ask me the question, sir, why this 21,387 plus 9208 is not tallying? That means you didn't understand consolidation. It will tally if goodwill is 0 and minority is 0. Are you able to follow, guys? Still it will tally? No. Because you can't add this. Are you following, guys? Okay. 27,530. Come down to PPE, guys. PPE. What is it? Line by line addition. 9468 plus 5486. How much? 14,954. Super. Will I write non-current investment? No, this is not associate. The whole point is to make this 0. So I will write here 0. Come down to current assets, guys. Inventory will be 3949 plus 1956. Will anything else come? Minus 20. Stock reserve. If you reduced in liability side reserves, I have to reduce in stock reserve also. Minus 20. How much? 5885. Trade receivables, you know better than me, guys. 2960 plus 1562 minus 45. How much? 4477. Clear, guys? Next, cash and cash equivalents, no adjustment. 1490 plus 204. Short term loans advance also same as it is. 520 plus 0. 520. 1490 plus 204 is how much? 1694. Balance sheet should tally 27,530. Check if it's tallying, guys. I don't even have to do the addition. I know it will be correct because we took everything in. That's it. 27,530. Let me check the answer. 27,530. This is a more neat answer. If you want to write neat answer over here, that's about it. Following, guys, you can mark this sum as important because every step has an area where you can make mistake right from the step 2. Are you following, guys? Okay. Proper sum for 20 marks. Exam, if it comes 30-35 minutes, you can take 35 minutes. It will take solid with presentation, everything. Understanding? Everybody got it? See why I did the balance sheet. Last sum I want to let you know, it's not difficult. See here, everything is there in the steps. Correct? What is difficult in balance sheet? Remember, balance sheet is the easiest thing. Amalgamation or consolidation, it's so easy. If your working notes are clean, balance sheet is going to be clean. Are you following, guys? Clear? Any doubts in this sum? Hello? With this, let me just run through the theory. Okay, consolidation. That's it. Yeah, we are done with the all sums. Any sum pending, guys? No. MCQ finished? Hello, you should tell me.
Yes.
Yes. So all sums, 20 sums plus MCQ done. Consolidation of subsidiary is done finally. Thank you, guys. See you all in the next session with a new topic. Keep studying, keep learning. Bye bye.